So I'm not just giving you the theory, I actually do this every single day. London session trades. So let's get to that first. So what are the London session trades? So what does London session essentially like to do? This is Forex on Euro USD, but it works on GBP USD as well. And I believe it works on gold. London session trades. What usually happens in London session? Well, during London session, we usually have a high of the day or we have a low of the day being formed. Now, London session is between two timings with these blue lines, 7 a.m. UK time and 10 a.m. UK time. So between this 7 a.m. and 10 a.m. is when the London session occurs. Now, between this time, things happen and they repeat themselves. And that is what I'm taking advantage of. And that's what you can take advantage of. If you're scrambling around, if you can't find a simple strategy, then this is for you. We can either create high or we can create the low of the day. If I just invert this actually, we can either create the low of the day or the high. Now we can move on to key concepts for the strategy. So the first thing is the Asian range. Now the Asian range is basically an Asian session basically, and this is between midnight to 6 a.m. or midnight to 5 a.m. Let's just say midnight to 6 a.m. UK time. There's also this very nice indicator right here. You can copy my settings for the Asian range. This is all I have. And it basically draws out the whole Asian session for you, which you will see in the strategy examples later on in this video. That is the Asian range, and we want to mark out the highest and lowest point of that session, which you will see later on in this video. Second is kill zone timing. This is just a high probability timing when you're going to be looking for taking trades. So kill zone timing, 7 a.m. to 10 a.m. UK time. Okay. Now, power of three. This is a concept which basically says that we have an Asian range, which is right here. Let's say price is moving around in Asian session. Then we have the highest point and the lowest point. Now, what the power of three says is that these 2 points, 1 and point 2, are very reactive. So when price eventually breaks through one of these points, we're eventually going to have a distribution the other side, such as that. Now, to make this high probability, we can come into a higher point of interest, a higher time fair value gap, etc. But to keep it simple, the moment we sweep it, we look for a reversal. So the power of three is basically 3 components. This Asian range, which is a component 1, the accumulation. Then we have the manipulation, which is a trick, for example, that is going one side. So most people would think that we're just going to keep going up. And then the distribution is when it distributes to the other side. So accumulation, manipulation, distribution. That is the power of three. You don't need to know anything more about that. We have the midnight opening price. So in that Asian session, which I was telling you about, between midnight to 6 a.m. UK time, as at 5 a.m., if you draw the opening price of the candle, let's say it's somewhere there, this acts like a good anchor for high probability trading conditions. So essentially, if your Asian high gets taken out and you want to look for sells, then your entry limit order should always be above this opening price. This acts like a premium discount sort of concept. If you're looking to buy, your entry should always be somewhere below this opening price. Okay, if you have an example where your entry is somewhere around here, this is low probability because you're kind of chasing the market, because the main moves, the highest probability sells for distribution will happen above this midnight opening price. So that is the midnight opening price. It's a very good concept which increased my win rate quite a bit and stop me taking low probability unnecessary trades. Then we go to basic market structure. Now this is simple. You just need to know higher highs, higher lows like that, and you need to know when there's a break of structure. So when we have this, we have a break of this swing low, which gets broken. That is essentially market structure, and that's all you need to know because that's what we're going to be using for entry models and in our entry time frame. Fair value gaps. Now fair value gaps is essentially when we have price inefficiency. So we have one candle, then we have a very strong candle, and we have the third candle. Now between these candles, we obviously have the wicks. However, between 1, 2, 3, between candle 1 and 3, there is a gap. So in this example, there's a gap between the low and the high of this, such as that. I'll just make it a different color as well, orange. So this is a fair value gap when there's price inefficiency. So essentially what we want is price to come back, fill this inefficiency, and then go down. The opposite way, when we have a bullish fair value gap, we want price to come down here, tap into this, react, and then go up to the upside. And if you feel like you're just not understanding this, it will make much more sense when I'm actually going through an example, etc., because you'll be able to see how this is actually working in the live market. Last thing you need to know is Fibonacci. Now you don't really need to know much about this. All you need to know is that we're going to be entering off the 0.5 50% area, which basically is just saying that once we have a strong move up or down, we usually want to enter when it comes back to a discounted level, the 50%, because that, obviously people want to buy in discount, sell in premium. So essentially we want to be buying at this 50% area. So essentially that's all you need to know for Fibonacci. These are my settings. Feel free to screenshot it and copy it. Here are the strategy rules. It's very simple, okay? 7 a.m. to 10 a.m. UK time, we're going to be looking for our trades. Then we wait for a sweep of the Asian high, or we look for the sweep of the Asian low, whichever happens first after 7 a.m. basically. Then we're looking for a 1-minute entry model. So the moment the Asian sweep happens, we look for a 1-minute entry model. And then the final thing, we buy below the opening price, as I said, and we sell above the midnight opening price. In theory, essentially, this is what it's going to look like. We have an Asian session between midnight and 6 a.m. okay, UK time. So we have basically the highest point, let's say it's this, and we have the lowest point, let's say it's this. Now between 7 a.m. and 10 a.m. when we come into session, we want to see one area, the high or the low being swept. So in this case, get swept right there. Then we're looking for a low, a high, and a low, break of this low. This is on the 1-minute time frame. Then we're going to be marking our Fibonacci from high to low. We're going to be waiting for a retracement to this yellow line, the 50%. That's where our sell limit is going to be in this case. And then we look for a continuation. This is literally the strategy that I've been trading. It's all on this channel. It's passed me a first phase as well of my funded account, many things, and it's got me a couple of profitable months too. So it is working, and I basically backtested this, and I believe in the system so much. This is the whole strategy in a nutshell. In theory, this is what you're going to be looking for every single day. Now, obviously, 7 a.m., 10 a.m. is the line, and your setup is going to occur between these two timings. If it occurs like somewhere here, I know this is a bit messy, but if it occurs somewhere here, it's invalid. If you take the trade, that's on you. You're just FOMOing and you haven't tested your data, because you know if it happens anywhere after 10, it's low probability. There's not much volume in the market. As I'm going to walk you through an example of a power of 3, an exact formation or example of the strategy which I've been telling you. So this was on the 18th of June. Now what do we have? We have an Asian range right here, which is the thing I've been telling you about, which is also what this indicator gives you. So this is your Asian range. It clearly marks out the highest and lowest point. So we can see lowest point is there and the highest point is there. So we have our two lines right here. Plus we have our midnight opening price at 5 a.m. So it's somewhere around here. So we essentially have 3 lines when we come into session. We have the highest point of Asia, we have the lowest point of Asia, and we have the midnight opening price. Now after that, we sweep. Now we have 7 a.m. and 10 a.m. So we're looking for our setup in this time window. So now that's happened. What do we have here? We have a sweep above here, right over there. So the first criteria is ticked off in the strategy. We have a sweep of Asian liquidity, the Asian high. So we're going to be looking for sells. It's very simple. Now, if we look here, we want to see this formation, high, break of the low with a imbalance somewhere in this leg or after. We want to see a break with an imbalance because it's showing a strong market structure shift, an even stronger sign that a reversal is going to happen. So very simple up till now. Now in this, do you see a swing low being broken? I don't, because I see this as a swing low, which does not get broken. So let me just clear this up a bit so it's simple. But essentially, we have a high, a low, a high, and this low does not break this. Hence why we don't look for it, 50% entry and a move down. So essentially, this didn't get broken, so I'm not looking for anything. Then what we see is a swing high right there. We see a swing low, and then that gets broken right here with a body, plus we get this imbalance. So to make this a bit easier to the eye, we have this high, low, high, break, entry, continuation. This is essentially that same formation which I was telling you about. It looks obviously a bit different because the market's not, very perfect, but this is essentially the formation, the entry model. Break right there. There was an imbalance right here as well in this example. We enter from high to low. Entry right there, limit order at the 50%, stop loss a minimum of 5 pips, and we target a simple 1 to 2 risk to reward. Okay, keep this simple, just target 1 to 2. I'm testing out 1 to 3 as well, but to be honest, I always just take 1 to 2 because it's simple on psychology and your mindset. So the trade in this example would be swing low gets broken right there. We have an imbalance from there to there, right there, which you can see gets reacted off very nicely. Swing high to swing low, wait for the retracement to the EQ, 5 pips, goes right there, and then target a 1 to 2 risk to reward, which does get hit. So this is the strategy in a nutshell. It's very simple. There were only a couple of components. One more thing, we were also above this midnight opening price, so that's always a high probability condition. You don't have to take my word for it. Go backtest this on FX Replay and TradeZella. Amazing softwares for backtesting. Discount links are in the description below. But if I just zoom out, This is a strategy, the theory which I've been showing you. Okay. Asian session, I get swept in 7 a.m. to 10 a.m. UK time, kill zone, get the entry model right here on the 1 minute, target a 1 to 2. This is exactly what happened, and this is what you want to be looking for every single time. I don't want to set you with unrealistic expectations. This doesn't happen every single day, but this gives you an edge, and if you backtest it, you can see it for yourself that there is an edge in this strategy. And I'm going to show you my backtesting results right now so you can see what kind of strategy expectancy you can actually expect with the strategy. So now I'm on TradeZella. This is a backtesting session which I've been running. I think it's around 8 months or something, but also 298 trades, all of that, which is well and good. Now this is the exact strategy which I basically just said in this video. And now you can see it's a 41% win rate, 104 risk to reward, which is obviously unrealistic. It's actually because I've got different filters on. So if I just do take profits, target a 2 risk to reward, this is a strategy. So around 100 trades, 32 are. So it's not a bad strategy. 45% win rate, which with a 2 risk to reward is profitable. And the good thing about the strategy, simple, systematic, mechanical, repeatable. Also, things like TradeZella is amazing to be fair. But if you can actually see things like reports, I can go to day and time. I can see that Friday is just so unprofitable. So if I go back to my dashboard, if I go to day and time, exclude Friday, look at this. Automatically I go to a 44R with a 52% win rate. What more do you want? Now, don't go off my data because I've already tested this in a certain way, and sometimes I see things which maybe you won't. So what I would recommend, go to FX Replay, TradeZella, one of these softwares. Discount link is in the description, and just try it out. Use a free trial, whatever. Backtest this strategy which I've told you in this video and avoid the noise. Don't care what anyone says on social media because that is what has ruined my trading in a way that, not ruined, but it's wasted a lot of time. So if I saw this video, just listen to this, go and backtest the strategy and see the results for yourself, and then see if you like it, if you want to go forward with it. But this is essentially the best way I've found to trade London session. So that is the end of the video. Hope you got a ton of value. If you did, like the video and comment how you found it. If you've traded the strategy, if you do trade the strategy, loads of things, or however your results have been. So comment, like, subscribe, and I'll see you on the next one. Happy trading and stay safe. Take care.